Hey traders, TG Watkins here. It is August 11th. It's Thursday when I'm recording this. And yeah, so we got the CPI number came out, it was lower than expected. The PPI number came out, it was lower than expected. It was down by 0.5%, something like that. And so, the conversation out there is the Fed pivot and that inflation is coming down. And so, other than the next expected Fed rate hikes, they weren't going to have to get more aggressive. Things are going the way they want, and at some point, it's going to be sooner for them to actually reverse course and price and actually lower rates at some point. And so the party's back on. The counter argument to that is that they haven't done enough. Inflation is still high, even though it is less high, and that they're going to end up chasing their tail, kind of the bullwhip effect, which is another thing that has been talked about, and that we're going to be chasing this ebb and flow of inflation for a while, and that we're going to be going back and forth, and we're kind of getting into some sort of oscillation. So we could be in a very, very interesting time of the market over the next few years about how this goes. Another thing to think about, what I've been seeing in the markets and in the charts is that so inflation's down, right? Commodities are down, and so demand might actually be coming back up. I'm seeing that oil and natural gas are starting to go back up, energy going back up. Well, price down, okay, consumers like, cool, it's cheaper, I can do more, I can go on trips again or whatever and spend money again. And so demand goes back up, and so the price goes back up. And we could be seeing this kind of, as I said, bullwhip effect or the chasing of a tail, that kind of situation for a while. So it's going to be real interesting how this plays out. I don't have all the answers, but that is kind of the summary of what I've been seeing, what I've been hearing, and just through the charts of what's kind of going on there. So let's kind of dive into this and talk about a few things. With the market itself, I was expecting a little bit more of a pullback. I was thinking it was going to be coming into the daily 21. It didn't, because the market, or the CPI came in lower than expected, so the market rallied. Now, we are very extended, but I'm going to show you some charts that could give us examples of what the market might actually be doing. The real question, and I don't know how to answer this yet, but the real question is, when will the market pull back to the daily 21? And so that's kind of where I'm wondering, because at some point it's going to. Like, it just does. It always does. It's just a matter of when. And so I'm kind of wondering, are we going to keep running up along, say, the hourly 50 for a while until we really run into resistance and we pull back, and that would be, are we going to kind of go sideways a little bit until we run back into the daily 8 EMA? Or are we going to jump up like this, run out, and then actually come right back down to the 21, and then maybe we kind of bounce up again for a double top? I've been talking to my subscribers a lot about this with the Moxie indicator and showing the patterns. All my typical patterns are from what I saw in 2008, are presenting themselves now. It's just a matter of when do they happen. So I do think that at some point in this run, it will run out and we will pull back to the 21. The question is when, and maybe today was the highest day. We don't know yet, but we're looking for signs and signals of that. But eventually, I do think we're going to come down to, say, about the 21, and then we'll come back up like this, and then we'll come back down towards the daily 50. That's generally the path that I think is going to happen. That's why I was looking for it back here, but it looks like it's going to be happening more somewhere up here sometime in the future. Also, just keep in mind, we are running into overhead resistance of the weekly 50. We're not there yet, but that's what I'm saying is we could get a pullback and then a move up, and then we could run into it. Same thing with the monthly 10. So I do think there's going to be a pullback at some point, but I don't think that's going to be the end of the market run. And I think it's going to be the next move up. So I'm expecting a pullback at some point, probably to the daily 21, and then a bounce up, and then that might be the end of the move. So kind of keep that 1-2 punch scenario in your mind. If we look at the NASDAQ, it's going to be basically the same kind of situation in through here. It is very extended, but how far is this thing going to go? And start noticing the Moxie indicator. Notice that we are going up, but notice how much the Moxie indicator is down. We also started noticing that as price went up, the Moxie indicator really wasn't up as much. So we were starting to see that even though price was really moving, the indicator was really not moving as much, and so it is running out of strength, but it's not done yet. And if we look at the IWM, this one is really, really up there. It really is. I mean, it's hitting the daily 200, and the weekly 50 is pretty darn close. And we could start seeing some negative divergence here. Now, again, it's not totally done yet. I've got some examples to show you what could be happening, but boy, this thing is kind of getting frothy up there. So, as I said, there's going to be a pullback at some point, and then I would be looking for a bounce, and then I would look for probably the end of the move, this up move for that. So we got that with the IWM, and then the UVXY, it does keep going lower. But again, I'm really going to be harping on this. There is something brewing, okay? If we look here, we have price down like that, and we have the Moxie indicator going flat. That is a form of divergence. And obviously it can persist for quite some time, but when this thing kicks in, I think it's going to be pretty big. So at some point, I would expect there to be a pop, and then a pullback, and then we probably get the big move. It's the same thing, but just upside down of what I'm expecting for the S&P and the NASDAQ. So yeah, kind of some stuff going on with that one. And then if we look at Apple, here is the example of what I was going to be showing you of how the markets could just keep going. What you'll see with Apple is that it pulled back to the 50, a little bit more, but to the 50 and to the 50, and it just kept going. And what you see here on the daily chart is that pretty much was price following the 8 EMA. It never actually came down to touch the 21 EMA. And so this is why I'm just kind of putting out there, it's hard to see if the market is going to be able to, carry this far, like along the 8 EMA, or if something like Apple is obviously on their own and stronger and it can do this, but maybe the index can't. The index is a lot of other things that are going to be pulling it down. So I do wonder how long the index can stay moving up like this, but we're going to have to pretty much look for and watch to see if price can keep following the hourly 50, the daily 8, or if price is really going to kind of roll over and dip pretty hard. But if you were just trading Apple, there were quite a few fits and starts in here, or there were quite a few pullbacks which might have looked like it was about to roll over, but it kept going up. And so that's where, we're just kind of keeping it in the back of our mind what might be happening with the market overall, and if it's really going to roll over, or if these dips are going to kind of be fake outs and still continue up. Notice that we are getting divergence on the Moxie indicator, but it's not done yet. It can still keep going. And again, usually there's a kind of a 1-2 punch before this thing rolls over. Keeps going up and up and up. Then you get a pullback, then you get a bounce, and then you get the rollover. Basically that double top situation. So I'm looking for that with Apple. I'm looking for that with the market, and we'll have to see. So I think that at some point there will be a pullback, and then there will be a bounce. Now, another one, you could look at Cube. Again, just an example. This is like CubeSmart, this is storage, like whatever. I'm just trying to show you guys the stock, because you can see here 50, 50, and we keep going up. This one, actually, the Moxie indicator is doing great. But, and you can see here, yes, it's very overbought, but it went straight to the daily 200, which was why I'm trying to mention it. Apple went beyond its daily 200. Costco went beyond its daily 200. Tesla went to its daily 200. Like a lot of these names went to their 200 overhead, and that's the same situation that the S&P is in. So the question is, can the market itself actually get to the 200 initially before it has to pull back? And that's the big question. That's really what I'm trying to figure out and wonder, and we'll have to just see how that goes. And then if we look at Costco is starting to slow down. This is doing a little bit more of what I was expecting, finally. And you can see here that, yes, it also went past its daily 200. Okay. But look what it did. It came down, tested the 21, tested the 21. That is more along the lines of what I was expecting for the market. And so now you can see, okay, so it had its big move up, and now you can see we're actually getting a little bit more legitimate of a pullback to the 21 EMA on the daily chart. And this is kind of what I'm wondering about for the market itself. So the market at some point is going to wear out, and it's going to need to pull back. And is it going to be a quick pullback to the 21, and then is it going to continue bouncing? Or is it going to kind of come down to this 21 here, do a little bounce, and then roll over? So again, first move that I'm looking for at some point is price bouncing to, or coming down to the 21, and then I would imagine it's going to bounce after that. The question is what kind of bounce and what kind of support is the rest of the stock market going to do? Do keep in mind, here's the Moxie price trigger indicating that here on this time frame, the hourly chart, that price is now actually below, or the Moxie indicator is below zero, so energy is below zero. And look, you can see as price has been going up, the Moxie indicator has been going down, and pretty much right where it crossed through zero is right where price is really starting to slow down. So that is that's why I'm saying look for that with the indices. Look at it for Apple, look at it for whatever thing we're doing, but you can see that these dips with the Moxie indicator still above zero, it was still bullish. Those were technically trampoline moves. Remember, a trampoline move is when price is below the 50, but the Moxie indicator is above zero. That's like trying to push a beach ball down underwater and it wants to shoot right back up, because the Moxie indicator is trying to communicate to you and tell you, hey, I'm still bullish. I'm still above zero. I still got positive momentum energy gas in my tank, and you should not be below the 50. So it pushes down there and jumps right back up. And so that's why I'm saying that the pullback that we're looking for on the market should get bought up. The question is, what kind of damage is that pullback going to do? All right, so then we look at Tesla. And if we're looking through here with Tesla, it made it to its 200 and pulled back. And what did it do? It's right here at the 21 EMA. So I would expect that price should probably bounce from here. Now, this bounce that we get might not be that strong, or it could be the last hurrah, because this one did take a lot out of it. The Moxie indicator did go below zero. I'm not ready to quite short this yet, because typically there is a bigger bounce here that we could see. And do remember that that Tesla is having their stock split in 2 weeks from now, and typically there is a run up into a stock split, so I would imagine that there's probably going to be another bounce somewhere here, probably a run up into that stock split. So there's Tesla, and then Amazon. Amazon is definitely overbought, like no ifs, ands, or buts about it. And you can see it is running right into its daily 200. It's also right here into some previous price congestion. And so that's a lot of resistance. And I would expect that Amazon is probably going to pull back to its 21. Now, is it going to do it like Tesla did? Is it going to do it like Costco did? What kind of pullback? But once it pulls back to the 21, I'd probably look at the 21 as being a buy. But then after that, we got to really watch out, because I do think that after these bounces off the 21s, we're starting to get in some dangerous territory. All right, so that is Amazon. And then, so energy, UNG, talking about this kind of stuff. What I've been seeing is energy in general, I think, has bounced off its monthly 10 SMA, its weekly 50 SMA, and then depending on what else we're looking at, they've bounced off of their daily 200s generally. And so now that I could see this, you had a big move up, and then you pull back, and now we have a move up like this. And so this, actually, this is an example of part of what I was saying is, hey, this was really overbought, and look what it did. It came down to the 21 EMA and bounced. And so that's what I'm saying about the market. That's what I'm saying about Apple and Amazon is, there's going to be a pullback at some point, and that pullback is probably going to go to the 21, and then I'd look for a bounce. Now, I don't know if that bounce is going to go someplace or if that bounce is going to be the last move to the upside, but there's generally a bounce at the 21. So this is looking interesting. UNG, we are in the leveraged ETF boil. You can see there's double bottom right there, and this thing held up, and we had a pretty good day today, and it looks to me like energy is going to keep going to the upside. USO, if we look at this, more on the daily chart, you can see it came into the monthly 10, the monthly 10 SMA, and it's basically coming into the weekly 50, more so coming into the daily 200. You can see there's a double bottom. You can see double bottom there, positive divergence here. And so it looks to me as though the pullback on USO is probably done, and that energy is starting to move upward. So let me show you some names that I've kind of got. CVX, one of them that kind of comes to mind. You'll see a lot of these patterns are very similar. Came down to the weekly 50. The 8 is now back over the 21. It's going to have to contend with this daily 50, because it is still in a downtrend. So it's going to have to kind of, do something to change the direction of the 50. But on the hourly chart, you do have the 50 over the 200, and now you have the 200 in an uptrend too. And we also had price below the 50, but the Moxie indicator above zero, and that is a trampoline move. Remember, price should not be below the 50 if the Moxie indicator is below zero, and so that is what we saw. Also, now that I'm looking at it, check that out for a Moxie price trigger. Like, talk about good timing. You can see price down, Moxie indicator up. There's the price trigger. That is when momentum on this time frame went from negative to positive, and you got a nice move. So that looked pretty good. That was CVX. All right, then APA. Just kind of going around showing you guys a variety of tickers and what they're looking at. You can see here, price is at the weekly 50. You can see double bottom, even a little bit of movement on the Moxie indicator. And yeah, we can get a move up. We can get a pretty healthy move, but just keep in mind that the daily 50 is still in a downtrend. So we can get a move up, and then there will probably be a substantial pullback at some point. And then what you can see here, price down, Moxie indicator up. So it's trying to tell you, like, look, divergence is coming in. You better be careful on your short. Then you can see double bottom and even more divergence. There's your Moxie price trigger. There's the test of the hourly 50, and you get a move up. And then, yeah, for whatever reason, this definitely crunched. Okay, there's just, you can't do anything about that. Can't do much about predicting it. Things happen, and there you go. That's why maybe have a stop right there. So now that this is happening, I'm looking at this as a double bottom. Then I'm looking at that as positive divergence, and double bottom. I'd like to see if this actually goes up higher. So that's APA. And then GLNG, and I was expecting more of a pullback on this one. I thought it was going to come down here to the weekly 50, but instead it decided it really liked the weekly 21, and that's all it wanted to do. And we could see a little bit of that here with the hourly chart, is that price down, Moxie indicator up, and then it was very obviously this is very messy. However, what you'll notice is the 50 was over the 200, which is fast moving average over the slow moving average, so that's good. And then you get, because it's that's bullish. And then you could see price dipping below the 50, but the Moxie indicator stayed above 0. That's a trampoline move, and that's why I call it a trampoline, because it's like you jump on a trampoline and boom, up you go. So just look at some individual names like this, and it looks like some stuff is starting to go. LNG, kind of the same thing. It did get closer to its weekly 50. That's more like what I was expecting for GLNG. And you can see here it came into the daily 200, basically a double bottom right there. And you can see double bottom, positive divergence. There's your Moxie price trigger, and then up, 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 and up. Like, wow. So yeah, energy looks like it's coming back, and it's going to go up again. So hey, maybe we're going to get some higher energy prices. Maybe gas is going to keep going up. I don't know. So, well, that's not going to be that much fun. All right, so we got that. And then let me show you some of the cryptos. So yes, the cryptos have been having a great time. Bitcoin is kind of lagging. Ethereum is doing pretty well, but the miners are really, really doing well. And for as much as this is a pretty stellar move, and it is, it's what I consider the first move. And I've had a lot of conversations with the Moxie subscribers about this, and something to look for and watch for. But notice we've got price down, Moxie indicator up, so there's some divergence coming into this. But mostly what I'm looking at is this weekly configuration. This was off the lows to what I call the arch of the foot. The arch of the foot is typically the 21 EMA, and it's the first move from the low to the high. So you've got your leg, you've got your heel, you've got the arch of the foot. And usually at some point, price will pull back, wherever, create the ball of the foot as it retests the low area. And if it holds, then we move up like that, and that creates the elf shoe. That's essentially the double bottom. That's the pullback. So this is the first move off the low. Great. But what's really going to be important, and what's really going to be informative, is when we get the pullback, well, how bad is it? And does it actually find support and start to go back up? And that's going to be the $64,000 question. The other thing with that is typically I then see that price needs to come back down and test the 50. So you can see we've got the first move over the 50. Now we need to come back down, test the 50, and see if it holds, and then we can move up. You'll see that in the past, here's the arch of the foot on the weekly, and you could see here that price got over the daily 50, and it did pull back to the 50, but it did not hold. So despite how big this move is, I'm saying that at some point, just like it did back here, it will come back down to the daily 50. Then the question is, will it hold the 50 and go back up? So hey, this was a solid move. I don't want to really be chasing it right now, but it was pretty darn good. So yeah, now let's take that, and I'll show you NEO, and you'll see how the pattern that I just described on Mara and what I was saying I'm looking for as far as what I want it to do, like a pullback, NEO has already done that. you'll see here that here's the leg, here's the heel, here's the arch of the foot, right? And you'll notice this is the first move that has crossed over the daily 50. And what do you get? Just like I was describing on Mara, I said from the arch of the foot, you want to see a pullback to the ball of the foot, and then we can get a move to the upside. And I said that with Mara, you have price over the daily 50, but eventually you want to see price come back down to the 50. And if it holds, then you get a move up. So that's NEO is showing exactly what it is that I want to see from Mara. Mara is probably up here. The Bitcoin miners are probably up here, meaning we are probably darn close to price coming down to retest the low area. We don't know where the low area will be, but come down, find some support, and then start to move up. And generally speaking, on the daily chart, I want to see price come down to the daily 50, and we'll have to see if it actually holds from there. And NEO on the hourly chart, you can see double bottom, positive divergence, and we got an up day. So NEO is looking pretty interesting. All right, so we got that with NEO, and then Riot, just to show you, they're all kind of doing the same thing. So remember, there's the arch of the foot on the weekly, and we have price over the daily 50, looking for a pullback at some point, and then we'll have to see if that pullback is buyable. And then KWEB, just to show you another variation, the Chinese stocks are looking not too shabby. So take your pick if you're interested in the Chinese stocks. But we've got the leg, we got the heel, we've got the arch of the foot, we got the ball of the foot, and I'd be looking for the elf toe next. And we've got price over the 50, pulled back, pulled back into the 50, actually went below it. But this is why we use the lower time frames to determine if we need to buy exactly at the 50 or below the 50, because now this actually makes for a potential trampoline move on the daily chart. Remember, price should not be below the 50 if the Moxie indicator is above 0. And so we have a potential trampoline move there on the daily. And I'm starting to see some positive divergence and a double bottom on the lower time frames. So yeah, Chinese stocks, there might be something there. And then just to kind of go around, if we look at Uber, this is also looking very similar to the crypto space. Just from chart perspective, this is what I consider the arch of the foot, and it's right up here at the 200. At some point, these things typically come down and they will meet the daily 50, just like NEO, and then we'll see if the daily 50 is actually support, and then if we can go up like that. So I would not be long in a name like this. Maybe we can short it, but I would be looking for it to fade back down to roughly the daily 50. And kind of the same situation here with NET. You can see it looks very, very similar to the crypto names, just very high up. It also looks like the arch of the foot that I showed you on NEO. And yeah, I would be expecting these things to pull back at some point. And if they can hold the pullback, then they're going to be good buys. And this is how we start building our list. We can start looking through these things and actually being prepared for what's going to be happening with this stuff. So, all right, everyone. Well, thanks again. Talk to you soon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.